So my name's Anthony Hadley, and I'm an investment director for A&P Capital, and I lead our firm's clean energy investment strategy for the Americas. So e-mobility refers to the electrification of transportation, and that includes all types of vehicles, ranging from passenger cars to buses and trucks, and through to high-speed trains. The term is not limited to the physical vehicles, but it really encompasses the entire value chain that supports electrification, including the energy supply, charging, and traffic infrastructure. Now, today, the future of transportation, both public and private, is really evolving. The market's shifting towards electrification as a result of really two key factors. The first of which is a very steep decrease in battery cell costs, and the second being advancements in electric vehicle technology. Battery costs, for example, have fallen by around 90% over the past 10 years, and that trend is only set to continue. Now, these factors have created very strong interest from municipalities and governments, as vehicle electrification is crucial to reducing carbon emissions, and they open up a whole range of new possibilities for urban development and connected cities. Countries are increasingly adopting policy commitments and providing regulatory support for bus transit electrification. And as a result, Bloomberg is forecasting that 60% of new bus sales will be electric by the year 2025. So we're targeting investments across the Americas with an initial focus on Latin America. Latin America has two unique characteristics that make e-mobility a really strong investment proposition. Firstly, Latin American countries have the highest per capita usage of bus services globally. And secondly, many of the major cities across South America have some of the worst air quality in the Western Hemisphere. So as a result, we're seeing significant policy developments from governments in the region, which are creating really strong tailwinds for the sector. Now, for example, the Chilean government has pledged that electric vehicles will account for 40% of private vehicle ownership and 100% of public transit by the year 2040. And there are around 7,000 diesel buses in the Santiago public transportation system, which consequently must be replaced in the coming years. Brazil provides another example. In 2018, the municipality of Sao Paulo set emissions limits for the city's public buses, which decreased gradually to zero over the next 20 years. A significant portion of their bus fleet will need to be electric to meet those emissions requirements, and the transit agency in Sao Paulo is planning to deploy up to 10,000 electric buses in that market over the next 10 years. More broadly across the Americas, North America, I'd say, is a longer-term proposition. The United States, for example, is in what I would characterize as the very early stages of embracing electrification. And one notable example is California, which very recently mandated that all commercial trucks and vans sold in the state by 2040 must be zero-emission vehicles. North America represents an opportunity of real significant scale for the e-mobility industry over the long term. We anticipate interest in the sector among the investment community will continue to grow, particularly as the scale of the market develops over time. We also see e-mobility as the next frontier in the clean energy transition, following the dramatic shift we've witnessed over the past decade towards low emission sources of power generation. As part of that shift, we've seen quite significant compression in investment yields for technologies such as wind and solar as those market segments have matured, with early investors in those markets the largest beneficiaries. With around 15% of the world's greenhouse gas emissions produced from transportation, the need to decarbonise this segment of the economy is critical if we are to meet our medium to long-term climate goals. And those needs will attract significant capital to the asset class, we think, which should drive a similar compression in yields over time. For another clue as to how the market may evolve, You can look to the adjacent asset class of rolling stock leasing, which AMP Capital has quite a deep history in, including through our investment in Angel Trains in the UK. So Angel and its peers used to be viewed by the investment community as a discrete set of assets and hence valued on a run-off basis. However, in recent years, we have seen these companies valued as going concern businesses once the market recognized the robust and long-term nature of their underlying demand drivers and the value of the diversified platform. And this resulted in a significant re-rating of these companies from a valuation standpoint. So we see a number of parallels between AMP Capital's rolling stock leasing investments and our more recent investments in electric mobility. And we think there's real potential for a similar evolution in how investors view the e-mobility asset class over time.